Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. One of our regular guests here is Stefan von Imhoff, the co-founder of alternative investing community fund Alts.co. Over the last couple of years, he's talked to us about investing in all kinds of unusual assets, sporting teams, vinyl records, art, tequila, domain names, watches. We even talked about investing in water. Today, another one that you don't hear about every day, investing in film financing. Obviously, this is general information only. You should always seek professional advice before making any investment decisions. Stefan, welcome back to Fear and Greed.
Great to be here, as always.
Let's start at the very beginning for the dummies like me on this one. Take me through how the film industry works. There are two ends of the industry, is that right? The big budget guys and the indie films?
That's it. And they're totally separate worlds. You got the big budget guys, the big studios, and then you've got the indie films. And, you know, when it comes to the big studios, it's no surprise that they're all making really safe bets right now, right? This has led to a slew of boring, predictable movies that do pretty well financially, especially internationally. I'm talking about the superhero movies, right?
Mm-hmm.
You know, the Avengers and a lot of the comic book characters and all those movies. Those do really, really well, but they're not that exciting, and they're not what really moves the film industry forward. For that, you got to go into indie filmmaking. So indie filmmaking is a lot more exciting. This is where really esoteric films are made. And some of these film studios, you might even recognize, some of them are getting really pretty big. A24 is still technically an indie film studio, but they're about as mainstream as you can get at this point. They've, created all sorts of great movies: Hereditary, Everything, Everywhere, All at Once, which won Best Picture. But then you have a whole slew of other, indie filmmakers, and they all need financing. And these films, basically, when it's out of the big studios, it goes into a whole other world of financing, which is what we call indie film financing. And that's a great, interesting world.
Okay, so that's what we're talking about, indie film financing. How does it work?
Well, indie film financing is pretty risky, I have to say. And there's a couple of different ways you can do it. I mean, you can basically straight up, just finance and own the distribution rights and the IP for a film. That's the most common way. I mean, this is how a lot of movies get made, especially when they're low budget movies. You look at movies, over the years that have just been basically self-funded for, $5,000, $10,000, $15,000. Some of them have gone on to do really, really well. There's a famous one, El Mariachi was the first movie by Robert Rodriguez, who went on to have an awesome career. There's been all sorts of indie films that have definitely done well. The problem is they're very risky, right? There's a whole bunch of stuff that can go wrong. The first thing that can go wrong is the film doesn't get completed. I don't have the exact stat in front of me, but a shocking number of films start and then never finish. And it's because the funding runs dry. The financing runs out and you can't keep the party going, and the whole thing just dies and everyone kind of loses money.
Right.
Not a great situation. So to counteract that, what a lot of indie filmmakers have done is venture into crowdfunding. And this is using platforms that are either purpose-built platforms for movie financing or stuff like Kickstarter. A great example of this model was Veronica Mars, which is the biggest crowdfunding story to date. This is a TV show, and it had a cult following, but it got canceled. And so there were a bunch of angry fans and unresolved plot lines and stuff like that. So they went to Kickstarter, and they raised like $5.7 million from almost 100,000 investors in just like something like 12 hours or something like that. Like absurd.
Wow.
Amount of, yeah. And they ended up, basically making a cultural hit film. And it didn't actually, even that one didn't make a lot of money, but the fans that funded it at least got to see the film. And that's part of what you're investing in with this crowdfunding world. But yeah, I mean, bottom line is it's a tricky world to make money in, and it's not for the faint of heart.
Okay, so how do you make money in it? Are you looking for certain genres? Are you looking for certain attributes of an indie film?
Yeah, well, there's no sure thing in this world, but if you are going to look at what's more likely to do well, it tends to be, there are specific genres that do very well. And one of them is horror movies. So horror films are scary, lucrative, like no joke. They're the most profitable movies out there. They usually don't take that much to make. They don't require huge stars. They don't require complicated logistics. They're inexpensive to produce. and they can earn quite a bit. I mean, Paranormal Activity, The Blair Witch Project, which was the original kind of, like archetype of like a horror film success. I think it cost like $500,000, made $200 million worldwide. What else? The Gallows has done well. That cleared $40 million on a $100,000 budget. So
Wow.
there are a lot of horror movies that have done well on shoestring budgets, and so that is one genre. That is one way. I wouldn't say it's a guarantee, but your odds are a lot better making money in that area.
Stay with me, Stefan. We'll be back in a minute. I'm speaking to Stefan von Imhoff, co-founder of alternative investing community fund, alts.co. And are you making money from ticket sales at the cinema, or is it a streaming service? How does that all play into it?
Well, it gets complicated. This is a very rapidly changing world. I mean, basically, the biggest thing that's happened lately is that the big streaming platforms are basically buying up movie rights now. So it used to be you would own the movie rights as an indie film producer, and you would own them forever, right? And you would basically, you would take some risk with that, but you would have the royalties forever from that film. That doesn't really happen when like Netflix, Amazon come knocking to buy your movie. They basically just buy the whole thing like outright. And that's great for you in the short term, but in the long term, it can hurt movie producers because they don't get the recurring royalties from that. Amazon and Netflix does. So it's 6 to 1, half a dozen of the other. I mean, more stuff is getting funded now than ever before, thanks to the rapid growth in streaming. But most of it's kind of one-off stuff. It doesn't get renewed. It doesn't really make a whole lot. So the filmmaker got their advance and they got their payment, which is good. But it's not really just because you have a movie on Amazon coming out or a movie on Netflix is not exactly like you can sit back and retire. It doesn't quite work like that.
So when you're going, Stefan, to look at an indie film project, and let's say we're thinking, let's go for the horror genre, what's my next step? Where am I going to invest?
Well, we don't invest in specific film production. What we do is something a little bit different, and we found a niche within this industry that it's almost alternative within the realm of alternative investing. And so what we've landed on is something called film bridge loan financing. And the way this works is really, really fascinating. So the film industry, and now I'm talking about even big budget films, right? They often face timing mismatches between when funds are needed and when the long-term financing becomes available. So basically, the films start shooting, and they need to start shooting in order to show everyone, all the big investors, that the film has kicked off. But they still have short-term financing needs that need to be met. And there's basically this persistent demand for what are essentially short-term bridge loans. These are about 8 to 14 weeks where these companies basically need bridge financing. So we don't actually fund individual deals. The reason is because each deal needs to move so quick. Each deal is a little fiddly, and it requires investors to move very, very quickly. So one of our community members has kind of solved this problem. A gentleman named Chris. He's solved this problem by putting together a 5-year investment vehicle that it's basically a bridge loan fund, right? And it reinvests the capital across dozens of projects so that when these studios are ready to go and they need that film financing, that bridge loan financing, this fund is ready to kick into high gear and deploy the capital and get it back in about 8 to 14 weeks. So we have recently offered this to our community, and we are about to close on our first investment into this bridge loan fund.
And this is more at the big budget end rather than indie end?
It is. A recent example, unfortunately, in this world, it's you're not allowed to talk about upcoming films, especially when they haven't been announced yet and stuff, but we can talk about what happened in the past. And so a great example of a film that famously needed bridge loan funding, and this fund actually financed, is the movie about Enzo Ferrari, called Ferrari, with Adam Driver. It came out last year.
Yeah.
They needed bridging money to keep going before they can get the real financing. And this is exactly what this fund was built for. So they helped all in. About 30% of the total film financing came from financiers like this, and 70% came from the big studios. So it's a significant portion of the industry.
And presumably the returns are pretty good. I mean, because it's high risk, as you've said, although what you're talking about mitigates that risk somewhat because you're spreading it across projects, but the returns presumably are pretty good.
They are. Let's talk about the risk before we talk about the returns, because we need to be clear on the risks here. So, I mean, the traditional risks with this world is that the mega funding, the large funding, the studio funding never gets secured. And everyone can lose a lot of money in that case. And it happens. I mean, there's all sorts of reasons it can happen. COVID ruined a lot of movies. There's all sorts of reasons that films don't complete. And there's really not a lot of recourse most of the time. There's also just single film risk, like you mentioned, right? Which is the idea of like, look, you could make a lot of money on a single film. You could also, the movie could flop, right? Yep. And there's no great way of knowing. I mean, again, there's actuarial math you can do to kind of figure out what's a good bet, what's a bad bet. But just like in venture capital, some companies fail completely. Most companies fail, and some go to the moon. So it's tricky. So what this fund has done is interesting. So the fund only gives bridge loans to films that already have primary funding, right? So that's already been lined up. So there's a major backer behind every single one of these. So these are not like mom and pop flicks that like could totally, fail because they have no major funding.
Yep.
But even within that major funding, it's still risky. So this fund requires that each film gets insured. Basically, each project has to obtain a bond, an insurance bond, that either ensures the film's completion or immediate loan repayment in the event that the film cannot be completed. And of course, this capital, last but not least, gets deployed across a basket of films, maybe a dozen over the next 5 years is kind of the idea. So between those three kind of mitigation strategies, it's just a perfect kind of situation. And, it's funny, you see this sort of specialized financing in other industries, like going back to VC for a second, you see it in venture with like venture debt within the startup ecosystem. And so like this bridge financing fills a specific capital need that banks are unwilling to address. Traditional lenders shy away because it's confusing. They don't really get it. There's a lot of perceived risks, but it's perfect for us in our community, basically any specialty lender like us, because, if you have that specific expertise within your lending community, and if you have backgrounds in film finance and production, I mean, you can make a lot of money. So this fund targets 16% returns per film. That's 16% returns over 8 to 14 weeks. So, I mean, that from an IRR standpoint, that's very, very good.
It is.
Again, there's no guarantees in this world, but the risks have been mitigated very well.
Stefan, as always, you have taught me about something I knew nothing about whatsoever. I feel a better person as a result. Thank you for coming on to Fear and Greed today.
Thank you, guys.
Now, Stefan von Imhoff, co-founder of alternative investing community fund, alts.co, ALTS.co. This is the Fear and Greed business interview. Remember, this is general information only. You should seek professional advice before making any investment decision. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.